All right, guys, what's up? Good evening, good morning, good afternoon, wherever you're joining this call from all over the world. How you guys doing today? Can you drop how you doing in the chats? For me, I'm blessed, I'm abundant, and I'm also grateful. Grateful to be with you guys. Grateful to be. I'm grateful for knowledge. Grateful to God for good health. I'm grateful for financial freedom. Grateful for living life, living purpose, and just imparting destiny. So actually, I'm grateful for everything. I'm grateful for myself. I remember years ago, 4 years ago, along the journey when I wanted to enter into Forex trading. I remember who I was then. I remember the turnaround. All right, if you can't see my video, you need to upgrade your Telegram. So saying please upgrade the Telegram. So, I remember lockdown, the turnaround came, and it's 2 years, almost 2 years now. Yeah, yeah. So, I just believe we can always give people whatever we have. Even though knowledge is expensive, but sometimes when you give people free things, sometimes it's better off and it helps them. So that's the purpose for this call. So guys, I want you to do something. Two things. Number one, go to the group and type "We are live, we are live, we are live." Just type it. We are live, we are live. Type it. I want as much as many people can open this call. We are live. Type "We are live." Let them know we are live now. Yeah, type "We are live." That's gonna be the best. You're not paying anything for it, but um, you're actually paying attention to instructions. So we are live. Good, good. Thank you very much. Also, the second thing, if you want to, it's optional, but if you want to, you can see my screen. You see my IG at Snappers Arena. Yeah, that's my team, Snappers Arena. Just follow us. So when next we have free section, we can all be together. All right. So basically, guys, I just want to take us from the basic of market structure. If you've joined any of my bootcamp with STF, the one of September last year, have you joined my own personal bootcamp in Snipers Arena? Different bootcamps I've done, trading different market fees and things like that. I've done a lot of bootcamp last year and this year. Did you also join the 7 days camp bootcamp that we did? 7 day camp, you will have seen different of my videos, and I also promise you guys I do some of my videos. You can go over them. So what I want to do this evening is that I want to take you guys from market structure, then we're going to chart analysis. We'll look at checklist. So it's not gonna be this in-depth, kind of analysis, no, kind of teaching. It's going to be just going through it, what you guys already know. You have the videos. Go to Havilah's YouTube page, you see all the videos. In-depth section, we just have 1 hour for this section because I have a meeting by 9:30 with some of my business partner. So I want you guys to just pay attention with me, follow me, listen with an open heart, and just in case you have any question, pen your questions down. Just pen it down in a sheet of paper, and when it's time for question, I will surely take your question. So what I want to do today is the video on YouTube. I'm going to tag Havilah to send the video now. All right, so what I want to do is I'll just do market structure, go by bit by bit. Then I'll go to smart money concept, which is the concept we use. I respect every trader out there, whatever concept you're using, whatever strategy you're using. There is no fixed strategy. There is no strategy that is better of any other. What makes a strategy efficient and profitable is when you're giving mastery to it and you're consistent in it, you will get result. Like I said, mastery plus consistency, best result. So I'm going to teach you SMC, smart money concept. That's the strategy I use. So if you don't use smart money concept, don't feel bad. I'm not saying your strategy is bad. I've also used different strategy. You can also use whatever knowledge I teach here as an addition to whatever you are using. Do you understand? So I'll teach that. I'll teach different checklists. Then we'll go into the charts and we'll analyze different markets. You understand? We will look at why some markets went the way they went, and stuff like that. All right, so let's just go. Well, let's start with market structure. Yeah. So, like just like I was saying, if you have a question, just pen it down. When it's time for question, you'll be allowed to type. I don't want you unmute unmute everybody because some people background are very noisy and it will affect other people. Yeah. So let's just go like that. All right. So let's start from market structure. Very simple. Just follow me. What are the types of market structure we have? Type it in the chat, guys. Type it in the chat. Type it in the chat if you can. There's no claim not knowing it. If you don't know it, just leave it. But if you know it, type it in the chat. You guys be fast about it. Oh, great. I love what you said. Okay. Good. It shows you guys have good understanding about it. That's great. I'll just minimize my space, Amazing. I love it. I love the concept and creativity you guys are putting in it. That's good. Yup. All right, good. So now, yeah. So for these, this is a downtrend, and market always go low and low and low. So it starts from a high, then it moves to a low, it goes to a lower, higher low, lower low, higher low, lower low, higher low, and then a lower low, right? Good. This is a downtrend market. Downtrends, no borders. Okay, good. Is it downtrends? Can someone please answer that guy on the group? He's asking where the section is going on. Please, can someone please answer him? Thank you. Therefore, a bullish market, it goes from a low, a high, and does a low. Tell them to upgrade their Telegram. Oh, just hold on, guy. All right. Okay, good. Thank you very much for everyone that's responded. So it goes from a low, a high, a low, a higher high, a higher low, higher high, higher low, then gives us a higher high. Now that's that for that, guys. And this is called an uptrend. All right, so it's an uptrend market. And the next one just goes, whoops, just goes like this, giving us this sideways movements. Let me increase it a bit, just give us sideways movements. So that's a ranging market. So you guys are set up whatever, what did you guys call it? trending, consolidation, ranging. Yeah, it's consolidation and ranging. These are both trending, but they are different market phase. Do you understand? You have my video market, different market phase. Go watch it. So now, quickly, let me just explain something. Now, let me change this to black. All right, so now let's start from downtrend. Now, downtrend always starts from the high. It always comes from the high, sells from the high, never sell from the low, and never sell from middle. Why that? Because if you sell from the middle or you sell from the low, when the chart is retracing, when the market is retracing, you'll be in loss, you'll be scared, just like what's happening in the crypto markets, when Bitcoin tanked down to $30,000, and some people are already scared, some people are already in loss. But those guys that bought it in the early stage, they are still in profit, That's the truth. No matter the dip in the market, some people are still in profit. So whenever you are trading either crypto or Forex, you have to always buy from the high or from the low. Just try and buy at a place, and at a safe place. And if the market has left you, don't rush. Don't rush to jump into the market, no matter your confirmation. That is the highest level of discipline you need to know. So now price starts from this high, then comes to this low, then to trace back, forming a lower high. Now, why is it a lower high? This is a high, but it's lower than this previous high. Just like I told you guys in my previous section, the body of the candle is what we look based on that time frame. If it is the weeks, you don't use weeks when you're looking for structure, especially on the time frame. You can do structure on minutes, you can do structure on 5 minutes, you can do structure on 30 minutes, you can do structure on 1 hour, you can do it on monthly, depending on what kind of trader you are. Are you a scalper? Are you a swinger? Are you an intraday trader, or are you a position trader? You need to understand the kind of trader you are to trade the market. Don't just trade the market because you want to trade market. Try and understand what kind of trader are you. So based on the time frame you're using, since we are using the daily time frame, let's assume you're using the daily time frame. The closure of the body of the candle, if you can't see the closure of the body of the candle, turn your chart to a line chart and you see it clearly, because the line chart will eliminate all weeks on that time frame. Now, I want you to know a week on the higher time frame is a candle body on the lower time frame. Now, this low is lower than this high. This high is lower than this high based on the closure of the body of the candle. Now, that's it's a higher low, but it is not yet validated. It can only be validated when there is a new lower low, which means when price closes based on the body of the candle on that time frame below the previous low. So a new lower low validates the previous. A new lower low validates a lower high. A new lower low validates a lower high. This one is a lower low. It's close below this. So this lower low is validating this lower high. This lower low is validating this lower high. If you understand that, drop a 111 in the chat quickly. Drop a 111 in the chat if you understand that. Quickly, let's go. Now, thank you very much, guys. So for uptrend always start from the low. Always buy from the low. Don't buy from the middle. Don't buy from the top. See, guys, the market is filled with abundance. The market will never leave you. If the market leave you, it's better for the market to leave you than for you to lose money. Do you understand? So don't rush. One thing I tell my team and those that have been privileged to meet is that I say, as a sniper, you are patient because you need to take a shot. A sniper does not just waste his bullets. A sniper is always patient to take the right shot. So as a sniper, wait patiently. If the market has gone, leave it. Don't rush. It's filled with abundance. It will come back. You will see other opportunities. Do you understand, guys? So it always starts from this low, then it goes to a high. It retraces back to this low. Now, this higher low, it's based on the body of the closure of the body of the candle on that time frame, not the week, guys. Closure of the body of the candle on that time frame. Now, sometimes the body candle might weak out. You hear it's weak out. You hear it's weak out. You understand? It's weak out, but it's still respected. It's not closed in between. When we go to live chat, we'll see a lot of examples like that. So it closes, and this is a higher low, but it is not yet validated. You have to wait for a new high for candle to close above the previous high to validate the higher low. So every higher high validates higher low. Every higher high validates the higher low. Every higher high validates the higher low. Do you understand, guys? If you understand that, drop a 222 in the chat. Drop a 222 in the chat. Let's go. Let's go. Let's go, guys. Come on, sheesh. Let's do this. Drop a 222 in the chat. Yeah. Good. Great one, guys. Great one. Now, for ranging markets, is a choppy market, is a sideways market. It's just going zigzag to the side. Now, one thing about the ranging market, I don't trade the ranging market. It's a personal principle for me. Why don't I trade the ranging market? Because it is trying to form what we call liquidity to the downside and liquidity to the upside. Now, to us, liquidity means money. These are chart patterns that retail traders trade. If you trade chart pattern, I honor you. I'm not rubbishing your strategy. I'm just saying what I know and what has been working for me. That does not mean I'm rubbishing your strategy. Now, for example, this is M. Oh shit. Sorry, just hold on, guys. For you guys that trade chart pattern, there's a saying that after you see the M, you see the W. Am I right? Now, this is a ranging market. It's ranging. Now look at it. It's actually ranging. You don't know where it will go to. So you actually want to believe that, or sometimes inverted head and shoulder, those things. Price can actually do something like this, because it knows that retail traders are targeting, because this is a resistance. Retail traders are targeting to sell down, and this is a support. Retail traders are targeting to buy up. So their sell limit here, buy stop here. Buy stop for those that believe that price will break this resistance, come back, turn it to a support and go up. And their buy limit here and sell stop here. Sell stop for those that believe that price will break this support, come back, turn to resistance and go down. So what does what do the big guys do? The big guys will just come to the markets and they'll just do that their normal magic and they'll come up, clear these guys, and for buy stop, it will activate buy stop, come back, hit their stop loss, and sell down. Now it will activate sell stop, activate buy limit, come up again, come to this region and go down. And you're like, oh, it went my way, but it took me out. Yeah, these guys are patiently, they understand all these chart patterns. So they are the one that move the markets to show you all the chart patterns you want, so that you can jump into the market and they will take you out. That's the truth. That is the truth of the market. You understand? The market doesn't just move on its own. The market moves based on human input. There has been this argument on synthetic. I'm not saying I'm right, but there has been this argument on synthetic that synthetics moves by algorithm, which I also want to believe, but I don't fully believe synthetic move only by algorithm. I want to also believe that there are some inputs of the bigger guys in the market, because this thing is ABC, textbook. The same concept on currency is also the same chart movement on currency is also showing on synthetic. You understand? Whatever anybody believes, the above all is everyone should make money. Yeah, so so that's the range. So I don't trade ranging market because liquidity is here, liquidity is here. So simple. You understood that. Now the next thing is smart money concepts. Yeah, smart money concepts. Right. So let me give you the checklist. I'll write the checklist. As very simple as ABC. This is what I use, and this is what worked for me. Yeah, make money is the cocoa. Yeah, that's it. You just have to make money. So checklist. The first thing I check is my trend. The next thing I check is range. I check is where the banks are. Bank candle. Next thing I check is my liquidity. The next thing I check is my Fib levels. Sometimes I check price, quarter point, and things like that. And sometimes, yeah, these are the checklists I use for smart money concepts. Now, trend, one always trade the trending markets, One always trade the trending markets, either coming down or going up. Trade has been done. If you saw the trends. Now, for range, now guys, you don't want to trade everything. Though I'm a technical analyst, I believe you need to look left. You need to look left to determine right. But guys, don't look too far. You understand? So now let's assume this is charts. Now let's assume something. Now you want to determine if market will play here. You are now going to look this far. No, now you don't need those far. You don't need this far, guys. You just need a range. Do you understand? So don't look too far. You can only look this far if price comes somewhere here, then you can look, okay, what will happen. Just like I shared on 2 groups this morning on cryptocurrency. I asked guys, I said, guys, why do you think the crypto market is behaving this way? A lot of people say different things, which I agree. But if you go to the total market cap of crypto, you will see why the market is like that. Because the market has moved from 1 trillion or level 1 trillion to level 3 trillion. And the market is retracing back to level 1 trillion. And in level 1 trillion, there are imbalances and there are bank candles. All those kind of things are things we analyze. So we need to look at the range. Now, what is the range? Sorry, guys. I just want to finish this section today because I have a meeting by 9:30. All right, so let me show you range. As a trader, your first priority should be, after your trend, is your range. So let me show you different ranges in this game. Let me change the color to red. Let me make it smaller. Okay. Let me delete this. Okay. This is your range for this level. Now for the next level, this is your range. Let me change the color. This is your range. Now for the next level, this is your range. For the next level, this is your range. So whatever you want to trade, okay, good. So for range, coming along. These are your range. So when you want to enter a market, if price has moved, change to black. If you can't hear anything, someone should please assist that guy on the group. He said he can't hear anything. He should upgrade his Telegram and he should join the call. All right. Look, you can screenshot out for him to join the call, please. So now this is your range. Your range starts from here. It has expanded different market phase. I've dropped that video for you guys. It expanded. This is a retracement in a bullish order, in a bullish trading market. You've seen your trend is bullish. Now it expanded, is retracing. Now what should concern you is this region. This is the region that concerns you. You shouldn't be looking for another region far left, which means the moment price breaks through this range by the closure of the bottom of the candle, then it's a break of structure entirely. Do you understand? It's a break of structure. So if the market is to continue bullishness, in which Bitcoin at the moment at the end of today, if it closes its candle below that level, it will become bearish and it will come down to that 1 trillion level. So two things. So now that's why if the candle closes below this, then it's bearish. It becomes bearish. So all we are expecting is that we don't want to, we expect, we anticipate, we don't know, but we anticipate in this game. We anticipate that price should not close below this previous low of the range to continue its bullish movements. This is the high of the range, is the low of the range. So price comes here, then it expands. Now it's not expand straight, it will go zigzag, 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 retrace, zigzag, yeah. Then it expands. Now, this is not more your range. This 2 region anomaly range. This is the low of your range, and this is the high of your range. How do you know the high of your range? The moment price start retracing, that is when you know the low of your range, the high of your range, and your low of range. Then when price come here, this is the level you are targeting. Nothing concerns you with this one. The only time anything concerns you with this is when price break this. And the reason price might want to break this or close below this is that there's a liquidity, internal liquidity. Do you understand? Then price goes and keeps going and keeps going. So this is your range. Guys, if you understand range, drop a 555 in the chat. Drop a 555 in the chat. Let's go. You can't predict. See, in this game, you wait to see what the market will show you. You don't trade what you feel, you trade what you see. Guys, write that stuff down. You don't trade what you feel, you trade what you see in the market. So you have to wait for the market to show you its direction, then you enter based on your risk management. You allow the market to show you what it wants to do by seeing, then you enter based on your risk management. Now, this is a disclaimer. Never enter the market because you've already seen what you want to do and over leverage. No, that's poor. Because the market, as the final say, it can still choose to take you out of the market. It's the market. That's why it's the market. It's the market. So trading should be fun, guys. So range settled. Now let me just mark range. Range settled. All right. So the next thing is bank candle. Now let me show you the bank candle. All right. So now let's do this. I've done this a lot of times, and I'm gonna do it. Yeah, you might jump into an impulsive move, All right, cool, guys. So now the bank candle, this is the bad guy, the bad guy, the bank candle. Now, facts to know. Let me just write facts. Few facts. Now, few facts about bank candle. All right. Let me take this off. All right, so guys, so this is just what I want to do quickly. All right, so it's bearish. It gives us that momentum coming down, low, lower high. It gives us lower low, guys. Then it gives us this kind of stuff, You know what I mean? I want to make it picture perfect. I want to make it picture perfect. Yeah, let me just make it picture perfect so it can be sweet. All right, so it gives us this internal liquidity. And this bad guy, an NFT. Damn it. This guy say an NFT. Hey, Yeah, so it came up here. Then, this guy took these guys out, by breaking. I'm going to explain everything. Don't worry. Just hold on. Yeah, so good. And, credits. Ah, that's not actually what I wanted to do. Damn it. Oh, shit. There's something I wanted to do here. It's correct, but I wanted to do something that will show you break of structure so you can align with the fact I want to give. All right, so let's do it. I'll do it again, don't worry, guys. Sorry for taking your time on that. So let's start from here. All right, it went up. Okay, good. All right. Okay. And when I sell it, I'm coming, guys. Hold on. I want to get the picture perfect stuff. All right. Okay. All right. Good. Yeah. I got I want to get. Got it. All right. Sure. You on the boom. Yeah, good. All right, so guys, this is it. Yeah, from the low to the high. Let's change the color. You know, sorry about that. From the low to the high, give us a one higher low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low. Then this guy did something sweet for us. He came and took these guys out, took these guys out. There was liquidity here. He took them out of the game. Liquidity. Okay, good. Liquidity. Then he came here to do something amazing again. He broke the structure. Should give us a break of structure. Let me increase this. Okay, good. Should give us a break of structure. Break of structure is BOS, just like give us this break of structure. Now, let me explain something to you guys. So these guys, gonna be a long explanation. I want you guys to understand the concept behind the bank candle and stuff like that. All right, so let's just reduce it. All right, so now in this bank candle, guys, this guy's bought coming. Okay. But let's say bought $50,000. Follow me, guys. Just follow me. I want you to understand the concept of the bank candle. So this guy's bought $50,000. So that they can sell So they can sell, let's say, so they can sell sold $100,000. So this guy sold. Now, so they did that. Now, so now they've pushed guys, they bought to take out liquidity. Now they sold to break the structure. Do you understand? Now, this is currently in drawdown. Sell, buy order now in lost. So let me give this border blue. So let me make the blue ticking so you can know the buy order is now in loss. So this buy order is now in loss. Are you getting me, guys? Are you guys following me? So buy order is now in loss. Let's make this black. If we don't finish today, we might continue tomorrow. Buy order now in loss. Oh shit. Okay, good. All right, good. So now buy order now in loss. So what they need to do is they need to buy up again. They need to buy up again. Let's assume they bought $60,000 this time around. Bought $60,000 to close $50,000 by order in profits. Do you understand? Do you understand, guys? So let me few facts about the bank candle. So let me write a few facts. One, bank candle mostly take out liquidity. Two, bank candle okay. How do I put this now? The next drop, the next move, next market movements after the bank candle causes a break of structure, a BOS. Causes a BOS. Okay, two. Yeah. So these are some facts you need to know about the bank candle. It causes a BOS. Do you understand? Now, let me explain, guys. So the market was bullish, it got to a stage, there was internal liquidity, people money, chart pattern and things like that. So the banks, they want to sell, they want to change pattern, do you understand? So what they will do is they'll have to push the market, they'll rally up, they'll buy a very large percentage, so as to take people that are setting pending or sell pending order. Yeah. So when they go up, they will not put in more money, pump in more money, times 2 or times 3 of what they used to buy to go down. That's why you see a lot of drop. You see perceptive drop. Sometimes you can see massive one. You can even see one. And those candles will cause a break of structure. Do you understand? It will change the directional bias of the market. Now, what would the bank do? The bank, they don't always close the law. So what would they do? They will move the market. They will not have to buy more to move the market to come and close this previous buy order. They'll come and move it. They can close it at 50%. They can close it at the open for break even, 50% for profit, or take it a bit higher, and for retracement. And so they can now open more position. Now, coming on. Now, bank open more position. So let's put this as green. Yeah. So they'll not do that, They'll not put more sell position. So this is where we are to enter. This is where we are to enter. Because they've taken this liquidity to the left, they've broken the structure. So this is where we are to enter. When they are opening more position, we are to enter here. And we don't just enter because it has gotten there. You enter based on evidence, again, lower time frame evidence. So that's that. Liquidity, I've explained liquidity. I've explained bank candles. That's green. I've explained liquidity. Let's make that pink. Now, Fib levels. So let me explain Fib levels. So, Fib levels. Fib levels. Guys, are you getting? If you get it, drop it 222 in the charts. They can close it at B. They can close it inside. They can close. They can. It depends on what they want to do. Fib levels. now for the Fib levels, everyone has their rules for Fib. Like everybody, there's no picture perfect stuff. I'm going to tell you the truth. There's no holy grail. Everybody have what he or she has gained mastery and learned. So you can see me trade in this way and I get results. And Tony might not trade in that way. And Havilah might not trade in that way. But we are trading the same concepts. Others might be putting we use it. Other might be putting harmonics, other might be using divergence. I don't use it, but it works perfectly. Do you guys understand? So it's just what you've paid with your system with over weeks, over months, over years, and what you've trained yourself to learn and what you've accepted that, the way of trading. So this is premium level. Premium equals sell. Keep it simple. I don't compound it. Oh, shit. No bother. Discount level. Discount level. Discounts equals buy. Yeah. Now, what does it mean? See, guys, very simple. The simplest understanding. When iPhone, let's assume iPhone 13, they are selling iPhone 13 for $50. You understand? $50. Everybody will buy. everybody would buy. So when there is a high demand, the owners of iPhone 13 will inflate the price. So it's $50, they inflate the price to $1,000. When they inflate the price, there will be low demand at that moment. So what should you do? You start selling. It has come to a premium level. You start selling. So you sell, because when there's low demand, what does a creator of a project do? A creator of a project or any good and service will reduce its price again. Do you understand? So when price has gotten to the highest and there's no more demand, it will start falling. Till it's come back to a discount level, people start buying, and it goes again. That's why you see the market simple like that. Don't compound it. Now there are different Fib levels. There is no perfect one. There is no perfect way to use it. For me, I use. Oh, this is scattered. I use the 80 Fib levels, 78, NT 78. This is precisely. This is my 78. I use 78. So if price has done this, shoot. So when price comes below my 50, any region here, if I see high low, something like this break of structure, I will enter and I'll take my price up straight up. And anything above 50, price can sell. So if someone tells you it is until price get to 72 before it says a lie, nobody knows. See, guys, write this in the group. Nobody knows the exact position the market will change direction. Write it in the group so everybody will know it. Nobody knows the exact position the market will change. Write it in the group. Nobody knows. We only trade based on what we see and our probability. So Forex trading is a combination of different checklists, different probability checklists. So when your checklist, the higher the checklists are met, if you have 6 checklists, if 4 are met out of 6, it's a good trade. If 5 is met out of 6, it's an excellent trade. If 3 is met out of 6, it's an average trade. Sometimes it can only be 2 checklists that are met out of 6, and it still go very well. Do you understand? So this is the amount of checklists that must be met. It should be personal determination and personal mastery. Do you understand? So that's that. Sell at premium discount. So I've explained this. Okay. I've explained price. Now I've explained Fib levels. Price is just, what's it called? What did I call that stuff again now? I've forgotten it. Oh, which remind me. I said something in the beginning about, that was just skipped off my head now. Price and time. So time is, London session, New York session, guys. You always want to trade in the London and New York session. Always want to trade big, because that's when the market movers enter the market and they pump the market. You understand? So that's that for that. That's that for that. All right, guys. You know what you do? Screenshot this. Just screenshot. If you can screenshot, and send. Go to Instagram, follow my IG page, and tag it. This is what I request from you guys. Let me just hold on. Let me put my second IG and just tag. These are just few things I just request from everyone. Share to show everyone was blessed. IG. Yeah, you can check for me on Solomon Akinrinbola or a Sniper. So guys, I want you guys to screenshot this and just go on IG. Just hold on. Let me copy this URL and I'll post it in the group. Go on IG and tag me. If you can do that, I'm grateful. It's not compulsory. Yeah. So let's use 10 to 15 minutes to go into the chart. And, let's just do some beautiful magic. If you're done, let me know. If you've done it, just drop a 1 in the chat. Follow Snipers Arena 1. If you're not an IG, that's fine. That's cool. That's cool. No issues. But if you've done it, just let me know. Snipers Arena 1 and Akinrinbola on IG. Tag me. Show me love. Appreciate what I'm teaching you. It's just that. So if you've done it, just drop a 1. Just drop a 1. Just drop a 1. Just drop a 1. So we should use the next 15 minutes. I have a meeting very soon. Whoosh. IG link. Okay, let me just post my IG link straight up. Since people ask for my IG link, how do you even get an IG link? Yeah. No funny thing, I don't even know how to get that my IG link. But I know I'm Solomon Akinrinbola on IG. Does anybody want to assist me on that? Does anyone want to copy my IG link? I can find it now. Yup. Oh, that's for Snipers Arena. Yeah, great. Can someone post the one for my name personally? Yeah, I'm waiting. I'm just waiting for you guys. Those that want to do it, and move on. Okay, yeah, I've gotten it. Yeah, so this is my personal one. Yo, you got it. All right, guys, thank you for everyone that did that. So let's go to the charts. If you screenshot it, good. Thank you. All right, so quickly to the charts. Now, guys, drop what asset you want me to just go over. I'm going to pick in 5. I'm going to pick in 5. 5. The first 5 that I see. And 1 per person. Okay, 2 entered. I'm not doing Luna. Luna is tanking. I'm not doing Luna. Luna is gone. From $190 to, to $1. That's bullshit. All right, so the first person say crash. Crash 1,000. See 1,000. Yup. Sure, I'm going to check some crypto and things like that. All right, so guys, let's do this. Now, always start from the top down analysis. Yeah, it's okay, guys. I've already picked. Thank you. Yes, very simple. Look at it. Structure. If you can't see the structure, change to line charts. You're gonna see shit. You can see the structure here now, right? Good. High, low, higher, low, lower high, lower low, lower high, lower low. Now, what can you see? What did the price do? Now, I need to put this disclaimer. Price would not always give you what you want. So you need to learn how to let the market go. So look at this. That's our trending market. Where's our range? This is the range we are trying to trade in between. And this is the range. Right? Good. So let's just use this for first example. Now, what the price do? So when price came here, now when you're using your Fib, guys, you use week to week, you know. This is the week to the week. When you're mentioning your range too, you use week to week, guys. Let me reduce this. So this is your range, you know, good. Now, opening this physically for me. You can see 78 above a bit, 78 above a bit, and if you want to check this region, you can go to this downside. Let's see if we can see it. It's gonna be a bit far. April precisely. It's gonna load it. Yep. Let's see. All right, good. Now you can see this beautiful market structure. Now I can see something here that I would love if you can validate on the lower time frame. See this market structure. Low, high, higher low, higher high, higher low, higher high. It broke this, you know, it broke this. Good. Now on the lower time frame, if we can see it, what happened here? This is an imbalance filling. Now, I hope we can see that. Just because of the spiky nature, this might not show us, but I really wish we can see it. I can see what I'm seeing here already. See? 15 minutes. Just hold on, guys. Good. All right, guys, just hold on. Now, guys, can you see something? Come and sit here. Now, I was telling you guys I saw something already. Now, see. If I go to the next lower time frame, don't forget this was the region we are looking at. If I go to the next lower time frame, we'll see it very clearly, very clearly. But let's use 15 minutes, very clearly. Come on. This was the liquidity that was taken out, right? This was the liquidity that was taken out. Good. Now, what structure? You know, this was the overall break of structure. Yeah. Now, what's structure here? Low, higher low, higher high, higher low, higher high, higher low, higher high, break of structure. This was break of structure, right? Am I right? Fibonacci. Shit. Take your Fib. I've told anything above 50, you sell. Now, these are some guiding rules I use. Now, personal rules now. Personal rules. Since this is a lower time frame, if you've been on my sections before and if you're in my team, you'll have heard me say this touchdown number. Since this is a lower time frame, for me, I would take my short anything above 50. That's my limit here. And I will explain more. And since this is spike, look at it. There's an imbalance. There's an imbalance in between these two regions. I don't know if you guys learned about imbalance. Let me take out this first one. Now, this is an imbalance. What's an imbalance? An imbalance is a disorder in between the charts, you know. There's a create space. So this is an imbalance. This is 50% of the imbalance. How do I know? When price go here, it's created an imbalance between this region and this region. So this is 50%, right, of the imbalance. You want to assume that this has not yet happened. Now, overall of it, that's why I say there are sometimes there are still more technical analysis overall. Overall Fib level. Look at it, guys. 50% overall is almost aligning with 50% of the imbalance. What do? Take your shots. Put your shot at this 50% here. Put your stop loss here. Above the week. Don't be stingy. Above the week, somewhere here. So that if there want to be a spike out, and see, price came into you and tanked down beautifully well. You will have joined it beautifully well. If I go to 3 minutes, I'll show you more structure I can see here. And what will you have attained, guys? Let's assume you joined here. Stop loss here. Let's see what you'll have made in this market. It's crazy, guys. This is how smart money works on every. If you took this down to this range, remember this range to the low of the range. This is a 1 to 28 already. You are reaching $10, you are making $280. 1 to 28 already, to the low of the range. That's how beautiful it is, guys. That's just how beautiful it is. Now, I have meeting in the next 4 minutes. We'll do more chart analysis tomorrow. Let's have on that section tomorrow, guys. See this, guys. See this. I can go on and on and on and on, showing you guys same thing. Low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. What did it do? It broke structure. Yeah. Can you see this clean up break of structure? What do? Fib. Almost at 78. I've told you guys. Look at this. Now, when price go here, see when price go here, it went up, creating an imbalance in between these two regions. Take your Fib. I trade IPA or almost IPA. I trade it. See 50% of your Fibonacci. This is it here. 50% of your imbalance price action. This is it here. It's aligned to your 78. Place your order here, not because I'm just seeing it, because this is how I trade. Place your order here, guys. Put your stop loss here. This is your order, where your order should be. Somewhere here, put your stop loss here. Don't be stingy. Then you can light it up. Different targets. This should be your overall targets. Yeah. Close partial. Rule number 1, 1 to 3. 1 to 3 minutes. Boom. Overall, yeah. These are liquidity. Trend line liquidity. Look at it. These are trend line liquidity. Do you understand? It's true. Trend line liquidity. You're targeting this region. This one here is the high. If you go to 5 minutes, you see double top here. Target 1 to 3, close partial. Target here. And you're going up, guys. It's textbook, guys. You went up, this up. It's textbook. Now look at this region again. Hopefully, let's hope it did. It did beautifully well. Beautifully well. Look at it again. Wait, what was that? This is Let's check. That was one. Previous one was 120. This one is 1 to 12. Look at this again, guys. Look at this again. See, high, low, lower high, lower low, lower high, lower low. It broke structure here, right? You can see as price respected it. See the liquidity it took out here. Let me expand this thing. See the liquidity it took out here. It respected, went up. Now that's not even my bone of contention. Shit. Oh, damn it. All right. Okay. I think we got it. So I'm almost done with this call. I have a meeting now. So we'll do more analysis tomorrow. Let's have an analysis section tomorrow. Now, see, this level where I'm going to. Now, look at it. So, guys, you have to take this checklist and go and do your research too. Now, look at it. Low, high, higher low, higher high. Look at it. It broke structure, guys. This structure breaking by the bottom of the candle. Can you see it? Can you see it now? What was price coming to do again? Overall, week to week, above 50%. Same. Remember, you already took this above 50%. Take your shot, guys. Take your shot anywhere you like it. Do your stop loss above. Go again. Same concept. It's ping pong. It's the same thing over and over again. Crash and boom. Same thing. Over and over again. See the results. It went low again. You know any trade we've taken here? 1 to 9. Same thing over and over. It's written everywhere. Written everywhere. So guys, I think this is all I can do for this night. Tomorrow we'll do more chart analysis. More chart analysis tomorrow, guys. More chart analysis. More chart analysis. More chart analysis tomorrow. So thank you, guys. Sorry I can take questions. Tomorrow I'll take questions and do more and more and more and more and more. So I don't do you guys get it? Do you guys get the concept and things like that? Do you guys get it? If you get it, come on, drop a 111 in the chat. Come on, blow this chat up. Let's blow this chat up, guys. Let's blow this chat up. Let's blow this chat up. I want to see you guys blow this chat up. If you get it, come on, blow this chat up. Blow this chat up. Let's go. Sheesh. Damn it. Let's go, guys. This is massive. Let's go. Sheesh. Right, guys. So thank you very much for opening on the call. See you guys tomorrow. I'll post the time on the group and have a beautiful night rest. Peace out. I love you.